The Master Crypto Crash Playbook: How the Smart Money Profits from Planned Market Collapses. Introduction: The hidden pattern behind every major crash. What if every crypto market collapse wasn't random chaos, but part of a repeating cycle that smart investors have learned to exploit? History shows us an undeniable pattern. 2018. Bitcoin plunged 84% from its highs. 2020. A 60% market crash shook out weak hands. 2022. The entire crypto ecosystem collapsed. Yet each time, disciplined investors emerged wealthier. This isn't about luck. It's about understanding the hidden mechanisms that drive these crashes and positioning yourself to profit from them. The 5 real reasons crypto markets crash and repeat. Expanded analysis. 1. The leverage domino effect: How borrowed money destroys markets. The modern crypto ecosystem is built on a house of cards of leverage. Here's how it systematically fails. Exchange margin trading. Platforms offer up to 125x leverage, meaning a 0.8% move can wipe out a position. Cascading liquidations. When BTC drops 5%, it triggers 100 million in liquidations, which pushes price down further, triggering 500 million more. Funding rate bombs. In 2022, Binance's BTC funding rate hit 0.3% per 8 hours, 328% APR, forcing longs to pay unsustainable fees. Case study: May 2021, BTC fell 30% in 24 hours after Elon's tweet triggered 10 billion liquidations. Why this repeats? Exchanges profit from liquidations. They take your collateral, and traders never learn. 2. Whale manipulation: The invisible hand controlling prices. Sophisticated players use these proven tactics. The pump phase. Accumulate coins over 6 to 12 months through OTC deals and dark pools. Use wash trading to create artificial volume. Up to 70% of reported volume is fake. Time big buys with positive news catalysts. The dump phase. Coordinate sells across multiple accounts to avoid detection. Target key technical levels where retail has stop losses. Use spoofing, fake large orders, to trick algorithms. Real example: a single whale dumped 25,000 ETH across Binance FTX in November 2022, crashing prices 15% in minutes before rebuying cheaper. Borrow. 3. Media amplification: How news creates self-fulfilling prophecies. The crypto news cycle operates on these predictable patterns. The insights. The FUD, fear, uncertainty, doubt, playbook. 1. Regulatory threats. SEC lawsuits caused 20-30% drops. XRP case dropped entire market 40%. 2. Exchange rumors. Binance insolvency rumors in 2022 caused 3 billion outflows in 48 hours. 3. Celebrity influence. Elon Musk's Bitcoin energy tweets moved markets by 15% plus in 2021. The psychology behind it. Retail investors overreact to headlines. Study shows crypto traders react 3x more strongly than stock traders. Algorithms trade based on news sentiment. 90% of crypto Twitter is now monitored by trading bots. 4. Contagion effect: How one failure topples everything. The trust collapse mechanism. 1. Initial failure, e.g. Luna UST. 40B vanishes in days. 2. Counterparty risk emerges. Who else is exposed? 3. Withdrawal, freezes. Celsius, Voyager, BlockFi, stop withdrawals. 4. Liquidity crisis. Even strong projects get sold to cover losses. Modern case studies. FTX collapse caused 50% drops in Sol, SRM, and other SAM coins. 3AC liquidation. Forced sells crashed BTC to $17,000 despite no fundamental change. Silvergate Bank. Run. Took down legitimate crypto services with it. 5. Human psychology: Why we keep making the same mistakes. The 4 stages of emotional trading. 1. Euphoria, market top. This time is different. Retail FOMOs in 2. Denial, first drop. Just a healthy correction. Holders refuse to sell 3. Panic, Crash accelerates. I can't take this anymore. Mass capitulation. Fork is 4. Despair. Bottom. Crypto is dead. Misses the entire recovery. Scientific proof. Yale study found crypto traders underperform buy and hold by 15% annually. Brain scans show losing crypto trades activate the same regions as physical pain. 95% of traders fail because they can't override these biological impulses. The hidden pattern. Why this keeps happening. All 5 factors combine in a predictable sequence. 1. Whales. Start distributing coins after bull runs. 2. Leverage. Magnifies the initial downward move. 3. Media. Amplifies the fear. Crypto winter. 4. Contagion. Takes down weak players. 5. Psychology. Ensures retail sells at bottoms. The result. A clean transfer of wealth from weak hands to strong ones until the next cycle begins. The 3 fatal mistakes that wreck investors. Panic selling at lows. Converting paper losses into real losses right at market bottoms, the #1 wealth destroyer. Holding zombie coins. 95% of altcoins never recover from major crashes. Meme coins and vaporware projects get wiped out permanently. Paralysis of analysis. Waiting for the perfect bottom while missing the entire recovery. Fear leads to total inaction. The crash-proof wealth-building framework. Phase 1. Prepare before the crash. Maintain 10 to 20% in stablecoins, your dry powder. Identify your core holdings, BTC, ETH, versus speculative bets. Set price alerts at key support levels. Phase 2. Execute during the crash. Deploy capital in 3 to 5 tranches, never all at once. Follow the triage method. Tier 1. BTC, ETH. Buy aggressively. Tier 2. Quality alts. Dollar cost average. Tier 3. Junk coins. Cut immediately. Phase 3. Profit after the crash. Stake blue chips, 5 to 10% API, while waiting for recovery. Take partial profits at 2x, 3x, and 5x returns. Rebuild your stablecoin reserves for the next cycle, said Arbrush. The smart money strategies. Shakap DAO 1. The Forever Vault. Top investors maintain a core position they never sell. 1 to 5. BTC held in cold storage, 32 plus ETH for validator nodes. This creates psychological security to trade surplus funds aggressively. Your surplus on 2. Sentiment extremes indicator. When mainstream media declares crypto is dead, buy signal. Your Uber driver gives coin tips. Sell signal. 3. The halving clock. Bitcoin's 4-year cycles remain predictable. 2024. Halving. Supply shock begins. 2025, 2026. Likely market top. 2026, 2027. Next major correction. How to prepare for the next cycle. 1. Now, accumulation phase. Build positions in quality assets. Earn yield through staking DeFi. 2. Bull market. Profit-taking phase. Take profits at predetermined targets. Rotate gains into stablecoins, blue chips. 3. Next crash. Opportunity phase. Repeat the playbook. Upgrade your portfolio quality. Final truth. The game is rigged, but you can win. The crypto markets are designed to transfer wealth from the emotional many to the disciplined few. By understanding these mechanisms, you transform crashes from threats into opportunities. Remember, the majority will always panic at bottoms. The majority will always FOMO at tops. The majority will never learn from history. Will you follow the crowd or follow the playbook that actually works? The next crash is coming. Will you be prepared?